how do we help funders to have an easier path to actually having impact through their philanthropy? It's more difficult than we all think. And what you're going to hear tonight are some information about how there's a lot of churning that's been going on for years. When I first learned about this space, I'd gone to a fundraising breakfast where Muhammad Yunus came. He's often recognized as the father of microcredit. This was back in 1995. My wife and I went, but we heard about microcredit, but there was something more important that he described. He described how the world of philanthropy was changing. It was being disrupted, just like the businesses that you run, just like the health field, just like every different aspect of this world, everything's changing and altering in the world of philanthropy. And so you're going to hear a bit about that. Our agenda for tonight is we're going to have our team that's been working on this Impact Innovation Group share some things. We're going to have a bit of a Q&A and discussion after that. And then our guests, Matt and Laura, I guess I don't know if both of you are presenting, or I should have asked. Will be presenting and sharing information about Renew Capital. This is one of our favorite partners doing some incredible work in Africa. So I think this will be a great opportunity to hear and understand more about this field of impact investing. I'm going to turn it over to Tanner.
Good evening, everyone. It's super nice to meet all of you. The first thing that we're going to talk about tonight is we're going to introduce this topic through some research. This was research that was recently conducted by the University of Washington. And what this group of researchers did is they just asked different groups how effective charities are. And so as you can see, this first group that these researchers went to was just average donors. They just asked average donors, how effective do you think that the organizations that you're involved with are with your funds? And so these researchers, they found, and the numbers came out to be that they believed that the top charities were about 1.5 times as effective as just the average charities. And what's also interesting is that you see here is that the least effective charities here are still pretty effective in what they are trying to do in solving the issues that they're trying to. But what's interesting and what complicates it a little bit is when they went and asked the second group. These are experts, and these experts ranged from professors of health economics, they were international development professors, there are those who are involved in actually running these most effective organizations. The figures that they came up with there is that these experts believe the top charities are over 100 times more effective than just the average charities. And then what's also interesting is that when you go down to the least effective charities, that unfortunately, that although they have the best intentions, sometimes these organizations, they are introducing more complications and more problems to the social problems that they're trying to solve. And so we all, as donors, we're all involved with these organizations, and we want to be sure that we're investing in or donating to these top organizations, but it can be hard sometimes. And so this research goes on, and we've experienced the same thing, is that donors who want to be engaged in the best organizations and being the most effective face these barriers to this. And so this comes down to a matter of expertise. If you're going to start one of these organizations, or if you're going to understand the problems, you have to have deep-rooted knowledge of the social problem. And this, of course, takes time. Not only does it take time to become an expert or find the experts, but it also takes time to manage these opportunities and manage these organizations to ensure that they're having the level of impact that we expect them to have. And closely associated with this is that a lot of the organizations that offer these services, they have very high barriers to entry. A lot of the impact investment firms have a minimum commitment level in the millions of dollars if you want to get involved with these organizations. And what's interesting is that if you look at it in the for-profit sector, if you go back to this problem, there's organizations, there's advisors, there's advisory firms that are all set up to help us navigate these challenges. But we find that there's a gap in the charitable industry in making sure that we have someone to help us with navigating these issues, with making sure that we're involved with the best organizations. And so at UI Charitable Advisors, we've come up with a solution to this. It's called the Impact Innovation Group. And it's a way to scale up our involvement with the best organizations. And it's done through impact investing.
Yeah, thanks, Cameron. Our mission at the Impact Innovation Group is to disrupt and accelerate philanthropy. The Impact Innovation Group will accomplish this through three primary objectives. Monthly deal flow, which will be online monthly impact investing events in which we will find and research and due diligence and present these investment opportunities to you. We will then facilitate any engagement or investment that you want to make in these organizations so that you have the choice of who you want to invest in and who you want to support. The second aspect that's really important, through our research we found that in order to scale impact investing, an engaged community is integral. And so just like we're doing here tonight, we want to interact with each other, engage with each other and network. We will provide this level of networking through an online platform that will allow you to message, interact with, learn from, post, and share the things that you're doing, and learn from others as well. The third and final way that we'll accomplish this goal is by providing access to impact investing funds. This is a great offering for individuals that don't necessarily have the time to pick and choose the organizations that they want to be a part of, but still want to have a scalable and diversified impact through investing around the world. And funds do just that. And so we will curate those funds and manage those funds and allow you to be engaged in that and be a part of that. Impact investing can look a little bit different across various organizations. So I want to create a clear picture of what impact investing looks like at the Impact Innovation Group. We have been directly involved in investments both here in the United States and in organizations around the world that are directly solving the world's toughest problems. We support these organizations or invest in these organizations through debt, loans, equity investment, and high impact grants. We're able to find these organizations by leveraging an extensive network of social impact professionals, individuals on the front lines, and people operating businesses that are solving these social problems. In the past, we've invested in over 50 companies that are focused on solving these social problems, and we have a 98% investment success rate. We're really proud of this record, and we hope to continue and improve this trend as you become involved with us in the future. One of our incredible partners that we've worked with in the past is here tonight, New Capital. We're really grateful that they're here. They're an incredible example of an equity investment that we've participated in the past. They are currently operating in Africa, and we're really excited to learn more about them. I won't spoil their presentation, but we're excited to learn more about what they've been up to. But this is a perfect example of the type of investments, the type of opportunities that we'll be bringing to you. Incredible, impactful opportunities that are not just here in the States, but around the world. The Impact Innovation Group, at its core, is a membership-based community. As you can see here, these are some of the offerings that this membership will have. Made to be flexible, to meet your needs, to meet your style, your time, your life, and your goals. We know that everyone is a little bit different in the way they handle investments, and so we wanted to cater to that as well. These are opportunities to engage with organizations like New Capital, to stay on the front line of social impact research, and to constantly be involved in social impact innovation, and to invest in organizations that are having incredible impact and solving the world's toughest problems like poverty. To become a member of the Impact Innovation Group, there's a $5,000 annual membership fee, which will provide you access to these benefits that I've listed previously. They're also listed on the handouts, so you can check that out as well. $1,000 of this membership fee will be directly invested into the UI Debt Fund 1. We do this for a couple of reasons. Impact investing is still a growing, emerging area, and a lot of people have doubt that impact investing can not only have real returns, but real impact. And we found the best way to learn about impact investing is to do impact investing. We're really excited about this opportunity, and we hope that you are as well, as we continue to dive into it and learn more. We'll now turn over the time to Todd to answer any questions and kind of lead a discussion on this topic. Thanks.
Thanks, Jackson and Tanner. So what I wanted to cover is really a chance for us to dig in and understand a bit more about what's happening in this world. We're going to take about 10 minutes, try to answer some questions, But I want to paint this picture again. When I founded this organization, I took a lot of its focus from Unitas, which is something I founded with partner Joseph Rennie. He and I created this entity, got a lot of other people involved. It was one of the world's largest impact investing firms. It's reached over 80 million people and helping them out of poverty at this point. It's a huge organization, connected in multiple ways, primarily helping people to create and have livable incomes from the different activities that they're participating in. And so really trying to bring that same thing here. Now Unitas was something we only went and talked to the ultra high net worth individuals about. But what we're trying to do with the Impact Investor Group is bring impact investing to the rest of us to help us understand what this looks like and what it is. And I just want to reiterate something that they mentioned. Our focus at UI Charitable Advisors is impact. We're interested in actually changing people's lives, not just doing something that, as you heard, may not be working, may actually be causing problems, but finding great, incredible organizations who are changing people's lives in phenomenal kind of ways. Literally 6,500% more than the average kind of group. We take a lot of our philanthropic perspective from the 1980s, where we bring in this notion of it's got to be, low overhead. We're focused on what's happening instead of what's changing. So I'd like to see if there's some questions that you have about impact investing, questions that you have about UI Charitable Advisors and our approach with what's going on there, and also about the Impact Innovation Group. Yeah, Liz?
Who are some of the other groups that you found are in that top tier that are 100%, doing 100% better job? Some of their names out.
Yeah, so some of the other organizations we work with, some of them are, as you'll start to hear from Renew, are actually connected to multiple groups, right? You're going to hear a story from them where they're actually an aggregator connected to many different organizations, startups in Africa. So we work with some other organizations like that in the debt space. We work with a group called Beneficial Returns that is focused on debt in Central America, South America, and Asia. So that's another great example. And then what we do for all the rest, literally, is the connections we made with Unitas years ago. We have organizations in Africa and Asia and Latin America that are connecting with us and saying, here's an organization you want to take a look at. Come and connect with this group. And we do an evaluation. We've sourced, we mentioned we've done 50 different impact connections with these companies. And they're all based on the different kind of due diligence. Another group we really like, and Tanner should probably tell you more about some of their due diligence, is a group called Bloom Standard. They're focused on how do you bring appropriate technology in the healthcare space to the developing world. And so one of the struggles is babies are born. We don't know if there's heart defects happening. How do we actually provide access to those kind of medical devices that we have? And the answer is, if you're born in India, it's very difficult to get to. If you're born in Ghana, it's not happening, right? Unless you're a very wealthy person in this country, you don't have access to be able to see that. So that's a fantastic group that we're doing equity investments in. I don't know, we could just trip down many others. Yeah, John.
You said that 95% of your investments were successful?
98. Yeah, we have one group that's is a debt group that's stopped paying for the last year, and we're trying to help them get back on track.
That's just me.
They're in Nigeria, and the new government came in and just completely dropped the dollar to I can't remember what their currency is now, but a huge currency devaluation.
I guess I'm wondering, what is the definition of success?
So for us, the success is A, finding the right group, and then B, helping them be funded. I mean, this is a good question. Helping them to be funded in the best way for them. So when we connect with many of the organizations, we do the due diligence, dig into who they are, what their team is, are they missing a team member, what do their financials look like, and then we take a look at, are they ready for a loan? Will a loan be appropriate? Are they ready for equity? Is this a group that needs some kind of grant to occur or a recoverable grant to occur first? So really, if you think about it, it's A, finding the A group, and then B, determining what's the right funding mechanism for those groups.
I guess my question is, so those are all pretty leading indicators, right? What's the post indicator of success?
Oh, the post indicators.
Either the equity has accomplished set impact point, or they paid back original principal, or like how are you measuring, like what's the somehow objective measurement of C maybe? You have A, B, like what's C that says this was actually, you can see the result of this, the outcome was what we were looking for.
Right, yeah, that's a good point. So I misunderstood what you were saying. So in our case, we're very interested in what an outcome is. We try to help these groups understand an outcome is really a measurement of the negative consequences that are occurring in people's lives. So if you're helping somebody in the poverty space, what are the negative consequences of poverty? And if you're not measuring outcomes that identify that change has occurred, then we're not going to work with you. So we're interested in organizations that are going to measure that and are going to be able to tell us, yeah, in the last year, 60% of the people we work with, whether they're here in the US or whether they're international, this is what's happening. And frankly, what we expect to find are groups that don't tell us. If they tell us 100% success, we're walking away. Because we know that's true. I've never seen that in the 27 years I've been doing this. And so what we're looking for are great groups that will literally work on the improvement that's needed to take that number from 60 to 65 to 70 and really show that kind of an outcome in people's lives. Yeah, great question. Other questions, thoughts? Yeah.
So when was UI Charitable Advisors start?
UI Charitable Advisors was started in 2017. We're actually 3 different organizations, 2 nonprofit organizations and 1 LLC. And so it consists of, if you can think about the different activities we do, we've created the entities in place so that as we interact with these groups and as we interact with donors, that we're providing the right vehicle through the right legal status. So it started in 2017. Yeah, good question.
Do you have any foreign entities or everything's just US-based entities?
Oh no, almost. In fact, I'd say it's the opposite. We have probably, in the investment area, in the impact investment, it's probably about 20% domestic, 80% international. Most of our donors that participate in our donor advice funds are interested in international charities, and so we try to cater to some of their interests. But we have charities. We work with entities all over the world, whether they're a nonprofit or for-profit. All of these organizations can take loans, and obviously if they're a for-profit, they can take equity positions as well and get engaged that way. So we're working everywhere except on the continent of Australia and Antarctica. So, yeah. Yes?
You've touched on this a little bit, but when an organization comes to you looking for some sort of, partner or investment, what do you look for from their side in terms of selecting who you fund and who you don't?
Yeah, so I'd say, literally on a weekly basis, we get 2 groups themselves connecting with us, not through one of our connector entities in these countries, but just coming to us saying, hey, we'd like you to know about us, understand who we are, And I send them an email, and it's the same email where it mentions, here's what I'd really like to understand. And if you can help me understand this, I'd love to make a connection. And I ask them for information about their team. What is the experience level of that team in actually being engaged in this kind of impact opportunity? I ask them about their financials. And then I ask them also, tell me what you're measuring to understand if people are actually being affected. And frankly, most of those connections get in touch and they say, well, what we're measuring is we fed 3,000 people, and I don't care about that. I want to know, are those 3,000 people better off because you fed them? And so I try to help them understand I do care about feeding people, but we've got to understand that next level. And if we don't, we're missing out on an opportunity to actually change people's lives. So, yeah, hopefully that helps a bit. Well, let me turn time over to Matt and Laura to tell us a bit about Renew Capital. I think you're going to find this incredible organization. I met them 8 years ago, and it's been a great relationship. We do a lot of impact investing with them. So, Matt.
Thank you. Okay, thank you, Todd. Just real quick, I'm trying to like gauge your room. Show of hands, how many of you have been to Africa in like the last 5 years? In the last 10 years? How many of you have an interest or a heart for Africa, as some people say? How many of you have given to Africa? And how many of you have invested in a company in Africa? Just so I make sure that this is an interesting discussion for you. We're like, who knows Y-Combinator? I've heard that organization. We're like Y-Combinator for Africa. So what questions, just so I'm gearing this to something that's interesting to you, do you have about what we do? Are there any questions just out of the gate that you want to know about? Yeah, go ahead.
How many companies have come into Y-Combinator Africa, and how many have left successful?
Okay, companies in, and okay, good. The success rate.
Success rate, yes.
And what is the definition of success?
That was easy, I'm a capitalist. So.
What else?
Any other questions?
Sure, I got one more. What kind of companies are you letting in? Is it just all high tech? Or are you doing service companies, product companies, anything that helps the economy? What do you do?
Beautiful, good. Anything else?
Be based in Africa or just serve Africa?
Based or serve.
Do you have preference for certain countries in Africa? Do you have certain criteria that you must not meet in order to invest in a certain country?
Okay, good countries, yeah. Really question, producer. Others? 3, 2.
Are you investing in just for-profit companies or non-profit?
Okay, cool. All right. Any others? Any questions? I think we'll cover most of this.
Very big macro question, but like, what is the long-term vision? You know, you're talking in terms of Africa. What is the impact that you want to have in Africa as a whole? What do you want it to look like?
Right there. That's a great question. That's a lot. Okay, I think I'll cover most of it. You're just about to raise your hands.
Yeah, I'm just gonna follow up on the countries in Africa, just because I view it as like the kind of risk profile different based on countries.
Yeah.
So you try to keep your like allocation just based on the risk of each country, and what do you do when a country kind of the risk profile changes?
That's what Nigerians did. Yeah. Good. I think we're going to cover most of these questions. Okay, well, first off, thank you for coming tonight. I'll try to go through these pretty quick. My name is Matthew Hughes. I love this state. I went to the University of Utah decades ago. I did my undergrad in physics there, did my graduate degree in physics and business, went to DC, became a consultant, that brought me to Africa. When I got there, my life changed, and I'll walk you through what that story is. In that process, I met the love of my life, who's right there. Laura Davis. She has her own story. I recommend you talk to her at the break, but we are the partners of the firm who founded the company together. Tim Shirk in the back. It's too quiet. He's telling me I'm too quiet. He's our general counsel, also very involved on the continent, and will tell you amazing stories. One of which was when he got kidnapped by the Taliban in Afghanistan, which I'm not sure we can tell you all about that. We'll go from there. Exactly. Okay, so this is Renew Capital. Our long-term vision to this question right here, what we are all about is getting the world, mostly the West, to move from giving to investing in Africa. We live over there. We meet with startups all the time. We meet with companies all the time. We meet with stakeholders, government officials, and before we leave, we ask them a question. We say, what would you like us to go back over and talk about? What would you like us to tell our fellow Americans about Africa? And what do you think they say? Yes, exactly. They say 4 words. It's the most common answer. Stop giving to Africa. Invest in our future, right? That's almost the number one thing that they say. Wow. So let's go ahead and start here. This right here is what most people, unfortunately, still think of when they hear about Africa. But Africa is emerging rapidly. We've been there for 13 years. We've literally seen the skyline of Addis grow up around us. I mean, it looks like crazy. I'll throw up a picture of Addis and people think it's China. It's growing unbelievably fast. 10 of the 20 fastest growing economies in the world are on the continent. Africa is urbanizing. By 2100, 13 of the 20 largest cities in the world are going to be on the continent of Africa. If you do anything in real estate, now would be the time to buy, folks. I'm not recommending that, but it's going to grow really fast. It's also, probably all of you have heard this, it's the only part of the world that is not dying. It is the youngest population in the world, and well over 85% of the workforce growth in the world that's going to come will be coming out of that continent. 1 in 4 people in the world by 2050 will be from Africa. And the cool thing is it's also becoming very technology enabled. All right? The largest mobile penetration growth in the world is happening on the continent. So what's really exciting is that while we still have that 1980s image that Tom was talking about in Africa, there's something happening on the ground that I think is extremely exciting. And I think the conditions are set for, first off, we have an extremely young population that is getting mobile connected. And with technology, AI, they can come up with product now that would take years to do in the past. They can do it now in weeks. Cloud computing, data, all of that is dropping down. There has never been a better time in the world, in history, to start a company. We've got the youngest population coming into a workforce that only has about 1 in 2 jobs available for them. 50% of the jobs, there's nothing there. All of these young people are going to start companies. And I think we're going to see something happen over the next 20 to 30 years on the continent that we've never seen anywhere else in history. It will be the largest startup boom in history happening there. And it shows right now 71% of young people polled say, in 5 years I want to start my own business. They used to say they wanted to go work for the government. They used to say they wanted to go work for an international NGO. They used to say they wanted to go work for a bank. Now they know the only way out is their own business. How cool is that? I think that's amazing, right? But we, the West, specifically the US, the center of capitalism globally, we continue to give to Africa. That's our main mode of operating. Our governments, Western governments, give about $30 billion a year to poverty. Individuals, foundations, we give about $10 billion a year. So all that money is coming in, and it's not working. We're losing our influence. If the State Department was doing that to gain influence, that game is not working. China and Russia are taking us to town. People are now more in favor of China than they are of the United States on the continent. When Laura and I first moved to Ethiopia, has anybody done Ethiopia? Okay, when you would go there, 10 years ago, you walk out and they call you a Ferengi. That's like a Mzungu in Kenya and other parts of the world. That means you're a foreigner, Ferengi. Literally, in 5 years, when you get off that plane and you go to rural Ethiopia, Laura and I are driving around, they call us China. And China. They run after our car and ask for money and call it. And we're now China. They have, in that short amount of time, the entire continent is flipped. All right, so I mean, it's a pretty big, important thing when we talk about UN Security Council votes. 28% of those seats will be sat on Africans. So, our question when we started the new capital is this: can we do this differently? History shows that time and time again, government steps in and does something that is not commercially viable, and they get it going, but then it gets privatized. Ladies and gentlemen, now is the time to privatize aid and charity in Africa. And that is what we are doing under New Capital. New Capital is moving the world from giving to investing in Africa. And if there's one thing I hope to leave you all with tonight, is that never has it been easier for you to actually begin to invest on the continent. Literally, that is what we tried to set up, is make it as simple as possible. And with organizations like University Impact, where you can set up a DAF, get the tax write-off, and begin investing tomorrow, it's absolutely brilliant. Now is the time to try it. But let's get into some more details for those of you who are wondering, where do we invest? How do we invest? What does it look like? Now I'll go into the hood and kind of walk you through what that is. So first, in a developed market, this should be very familiar for most of you. A lot of you are in business or investment world. In a developed economy, you're going to have friends and family rounds of capital. You'll have angels, angel networks, early stage VC, growth funds. You'll have some investment banks that are getting ready to take a company public and then ultimately go public. But in Africa, this is all missing right in that middle area. So right here. All that's gone. You might have, like in Kenya, in some places, you might have a couple angel groups, but this whole spot is pretty much empty. That's the pre-seed, seed round. It's like $10,000 all the way up to $1 million, $2 million of capital. There's hardly any of that available on the continent. Now remember what I just told you. You have the largest youth population moving into a workforce that has no jobs for them, and they all want to start companies. Those companies need a little bit of capital. Where's that going to come from? Now that's an opportunity. And that's the opportunity that we saw when we started New Capital. So if we can get some money into that space and figure out a way to do it, not only will we do a lot of good, but we can make a lot of money. And so why is that the case? Well, first off, there's no capital. The ecosystems are really fragmented. So if you go around and meet with accelerators in Uganda, you go to Kenya, you go to Rwanda, they're all just kind of sitting around these spaces and not really doing much. Most people don't know what a term sheet is. Very few understand what a convertible note is. When you talk about a cap, they're confused. Local law firms don't know anything about how to execute a transaction. We've got to work on that ecosystem. We've got to actually work on the business or on the ecosystem before we can invest in that ecosystem. So we asked ourselves, how are we going to do this? 13 years ago when we got to Ethiopia, nobody knew what private equity was. We said, how are we going to get into a country like this and actually invest successfully? We said, well, hey, we're giving away $30 billion a year. If we could just use a tiny little fraction of that money to start to do that local ecosystem building work, maybe we could do that. And then we said, well, where are we going to get the investment capital? Well, if we can convince smart card-carrying capitalists that care about the world that, hey, there's a way to invest in Africa versus just give money away, we think they would. And so we started to build those rungs, and that's exactly what Renewed Capital has done today. We are in 14 countries right now, so some of you have asked our geographic diversification. We're in 14 countries. The light ones are the ones we're thinking about going in. Obviously, some of them are extremely risky, and I'll talk to you all about risk, currency hedging, and all sorts of fun stuff. But right now, this is our geographic footprint. We're one of the largest, as far as geographic scope, investment firms on the continent. You're asking, where do we invest? We invest first off in selecting good founders. At this stage of the game, when you're investing in companies at that pre-seed seed stage, you all know that, it's all about picking good people. So we spend a lot of time screening the founders, getting to know them. Laura and I are constantly on planes going around, meeting face to face. We invest heavily on the continent in every fund, in every deal she and I invest in. So we actually started as an angel network years ago, and that grew to like 200 plus families around, mostly from the United States. And we were kind of like the lead investors. We've now pivoted into funds, which is a lot easier because a lot more diversification for our investors. But we do mostly tech-enabled, asset-light. So we also started early days investing in coffee farms, and textile mills, and juice factories, and tahini companies. Great, until there's a civil war and you lose everything, which is exactly what happened to us in Ethiopia. So we then started to see all sorts of opportunity, especially up here in this part of the market. So we need to exit, right? That's going to be the hardest piece of when you invest in a country or a continent like Africa. It's like, how am I going to get the exit? Well, if you notice where the capital is starting to form, and that capital is starting to form in that upper stage of that market, we can start building that pipeline and growing it up and selling it via secondaries and exits that way. So tech-enabled is we see is a very good growth market for us, and then we do staged investments. So here's how we work. We have an ecosystem building team. This is a fully funded by foreign government team that comes into a country. They map out all the accelerators. They map out how to invest in that country. Every country is unique, so we really have to understand how it works. We have a way of tracking regularly how the country is doing. We have a tool that scrapes data on what is being tweeted by the leadership, what's being posted, how the investment policies work, what new capital is coming in. We're tracking that on a monthly basis to see is it trending upwards. We're starting to trend downwards. It's a very data-driven approach. We do a lot of training with law firms, local law firms, so they're ready to execute the transactions that we're doing with them so they can represent the founders that we're investing in. And then we start to invest. So again, as I told you, we built a very large angel network. Those have all now mostly converted into our LPs and our funds. We have an accelerator fund, just like, again, Y-Combinator. We're investing in about 30 to 50 companies per year. We're writing about $150,000 checks. We ideally use convertible notes, but everybody wants to use safes now, thanks to Y-Combinator. So we use those. And then we take them through a program. And then the best of the best will qualify for a follow-on fund or follow-on investment from our fund. I think the picture that you saw earlier of that woman working in the mailroom, this is actually the company that's digitizing that whole process so that now your cell phone can be your PO box. Think of that. About 1,000 people in Kenya share one PO box. One actual physical PO box that you have to go and find a letter, your tax return, your package from Amazon, and it will. But all of that now has been put on your cell phone because of a company like this. All of that potential is happening right now. All that legacy infrastructure that we have to deal with in other parts of the world, in Africa, it's all getting built from the ground up. It's very exciting. This is our investment committee. We're all founders, except the guy in the middle bottom, Judy, he's our lawyer. But this is our investment team. We're all on the continent. We all live there. We've all started businesses there. We've all made mistakes. We've all had successes. It's a great team. This is our team from across the continent. So we've got, again, got teams in 14 countries. And here's some of our portfolio. This is growing daily, but this is our portfolio right now. Again, mostly fintech. So we're investing a lot in financial services, digitizing banks. So all of that brick and mortar, when you fly into a capital city in Africa, you'll see beautiful skyscrapers that are getting built up. All of those are banks. And fintechs are coming in and taking all of that. They're eating into all of that physical infrastructure, putting it all on phones, and people are able to finally get access to financial services they've never been able to get access before. We have insurtech companies, logitech companies, we've got EV companies, we've got the largest motorcycles. We've got an EV company that's building those, beautiful business. And we have two funds. So our accelerator fund is that one where we're investing high volume, small checks. We're raising for that right now. We actually have a close on December 5th. Our next close, we do stage closes. And then we have a follow-on fund. That follow-on fund will do about $1 million into the best performing companies in our accelerator. All right, here's some of the details I won't get into now. But what I want to do is just leave you with a little vision that I think is really important about where we think the continent will be. There's so much we can do right now on the ground with very little amounts of capital. Right? You can invest, your dollar can go a lot further. You can get a full stack development team. I'm talking about 4 or 5 highly skilled people for $4,000 total. Think of that. You're never going to get that anywhere. And that's a really good living for them, a really good wages. All right? You can build companies from the ground up. You can start building up entire cities for these startups to come in. This is not about, the paradox of this whole thing is we're not going to solve poverty by trying to solve poverty. It will only happen when we start to focus on creating prosperity. All right? You have to have that pull. You have to pull that opportunity into the market. So when we have, our other big projects on the ground, the U.S. government's funding all these railroads, all of these big infrastructure projects, the youth don't want that. They want startup hubs. They want places to meet investors. They want cafes. They want restaurants. They want what we have here, there. And I think it's possible. I think we can do that as a government, as a group of citizens that care about the continent, as people that are trying to help leave the planet a little bit better. And I think you can do that now very easily. It is so easy to begin investing. It really is. If you have a DAF, or if you don't, we have a DAF at the University Impact. Laura and I have one. We invest in the accelerator through the DAF. We invest our real capital in our follow-on fund. You can do it that way. You can use any modality you want. But never has it been easier to start investing than after this. So I hope you join us. When you invest, we do a lot. You can come on trips with us. We host what we call econ tourism trips. So our investors come over. We have a group coming in April to Morocco, where they'll come and participate in one of the biggest tech summits on the continent. It's huge, and then they'll go around and see our portfolio companies. Yeah, and that's us in a nutshell. So I would love to hear your questions and also make sure that I cover all of this. So let me first go through the questions that I didn't answer, and then we'll open the floor for any others. What's the composition of the group coming in and the successes going out? So for our portfolio in Ethiopia, when we first started, so we spent the first 10 years of investing, we did private equity in Ethiopia. So I think we invested in 11 companies. We have had 2 successful exits. We lost like 3 companies during the war. A couple others are still going, and we're in the process of exiting our textile company. Hopefully that will happen here pretty soon. So I would say that was pretty much a wash. It was in that time that we learned, okay, so private equity micro private equity in small mid-sized businesses in Africa is great for debt, it's not good for equity. With our venture capital portfolio, we have about 2,000 companies that are applying every year in the top of the funnel. We whittled that down to 30 companies. We just had our first accelerator fund last year where we invested. So we're still trying to see how that goes, but already a couple companies that received follow-on rounds, which is really great. So we've seen valuations on paper, go from like 5 million up to 40. So you're seeing one or two that are starting to get good valuation increases. We've lost one, but overall, most of the companies are just in growth mode right now.
So Matt, along that line then, if you're average 150,000 times 11 companies, that's at 1.6 million. So you said wash, so you put 1.6 in and 2 were successful and you got 1.6 out.
But that was the Ethiopia portfolio.
Correct.
The Ethiopia portfolio, we're doing like $500,000 up to $1 million into those companies.
Okay.
And those were individual SPVs because that was an angel network. So some deals delivered 2-3x. Some we got just 2x out, some we lost everything. So across that board, where if I get the textile exit, we'll be in the black. And that total amount that we invested in those early days, that was like, I think, I'm gonna say like 4.5 million total. So it's still very small. I mean, when it comes to what it feels, again, everything in Africa is extremely small. You have to like recalibrate the way you think of pipeline and just investing. So that Ethiopia portfolio was that profile. The tech portfolio that we're doing from 2022 onward, the VC, that's that 150K check. And that's what I'm saying. Those valuations are all on paper. We haven't had any flex. We just pivoted into that. That's all.
I think also though, to like Todd's point too, the impact even of the losses. So we, in that period, we created about how many jobs?
Almost 2,000, 3,000 jobs.
And the successful ones, the textile, like he's at like 3,000 jobs. The coffee company, they support 10,000 smallholders. So then you get some outsized also impact returns, even in some cases when you have failures. There's still multiple years where each job that we created is supporting 5 to 12 people, right? So it's an interesting dynamic.
Types of companies I covered, I think. On the country selection profile, I talked a little bit about that. You really do need to be very aware of, if you're investing in Africa, very aware of the country selection. And I would almost say the two selecting steps you need to do is country and company. So you really want to look at their currency, you want to understand their debt, look at their balance sheet. Has the IMF come and visited them recently? So once the IMF starts to come visiting, you're going to expect a devaluation. So you have to have a lot of things that you're considering. What's the administration? When's their elections coming? So we track a lot of that in our progress. And hopefully the countries, we think about half the continent will do well over the next 50 years, half the continent will not. Okay, so about 27 countries we think will do well, and then some of them will do really well. So we think like Rwanda, Kenya, Nigeria actually will turn corner and do very well once they come out of this currency issue. South Africa, Egypt, the big four is Egypt, South Africa, Kenya, and Nigeria. But then next to that, you're going to have Morocco. Morocco's going to do very well. Senegal, Cote d'Ivoire, Rwanda. Rwanda is excellent, small, but doing very well. Zambia, Mozambique are going to come out of the current election strife right now. It's going to do well. Tanzania is also a sleeping giant. Ethiopia will do very well. So yeah, we're tracking all this. That's our general thoughts. Question? We're a for-profit company for sure, 100%. And the long-term impact, yeah. Again, I hope someday, I mean, I always say this, but I hope someday our daughter, maybe it's going to be our granddaughter. You know, when I was a kid, I don't know how old the average age of this room is, but when I was a kid, my parents used to say, like, don't leave food on your plate because there's starving kids in China. Right? That was like the line. Nobody says that. That country has totally come full circle, largely driven by a massive boom in the private sector. I hope when my grandchildren come of age, they ask, we used to give money to Africa? Like, that's crazy. Like, it's just like where everybody's going now. I think that's a potential outcome, but we really need to step in and fund stars. absolutely. Any other questions? You're tired, you want to label? That's a good yes.
Oh, no, another question.
Okay, let's talk shop.
So 50 companies a year right now, that's 50,000 a pop, so that's $7.5 million a year, is that where you're at approximately?
Yeah, it depends on us capitalizing our funds. So we run them in parallel right now because we still have a hangover from our angel network when we were doing it, syndicating the deal by deal. So we're in discussions with people that are seeding our funds into the future so we don't have to keep doing that. But yeah, between 3 and 5, it depends on how much funding we get in. We've got a good pipeline. We have a really good pipeline. So the target is 30 to 50 companies at around 150K on average per check. Some will drop down, some will go to 100K. We've even done 50K checks if they're still very early stage. We want to see how they do, but on average it's 150. Other questions? You guys don't want to dig into the instruments? Or what's it like yelling at people on board? You know, I used to yell at people on board. That was the worst thing I did.
And you talked about how in your current fund, you just did some follow-on investments. You get a paper valuation of 40. Can you talk about that company? Like, what's their ARR? I'm assuming it's a subscription to tech or something? Or?
No, that one's actually a e-commerce company. So these phones, I need to turn mine on. So the cell phones, globally, they kind of get channeled through Beijing and other parts of the world. I think there's a place here in the US too. And they get resold to the global south in this whole big e-commerce world. And this company gets them, cleans them, wipes them, fixes them, and then puts them all online. So it's an e-commerce play as well as a retail play. And they resell those phones at a way cheaper price than even a current used new phone in Africa because people want that brand of having an Apple iPhone or something. And so that's the company I was
So
describing.
what are their growth strategies? Just give me an example. Like what's a big company in your portfolio?
Right. So that's going to do probably almost $2 million right now in annual gross revenue, not GMV, but gross revenue. And so that's about $2 million is what we're going to see out of that. We have ones that we're looking at right now in the pipeline for this accelerator that are doing $8 million in revenue with $4 million EBITDA, and we'll probably get in at a valuation of between 8 to 10 million, which is crazy. I almost feel too guilty about that, so we might tell you about the valuation. But that's a neobank out of Zambia. So
What's their growth rate, for example? Like, so you've got healthy margin, right? But multiple is a function of growth.
Mhm.
So question like, what's the example of growth rate on that 50% EBITDA?
Yeah, I mean, she's doing well. I think she's about maxed out in Zambia, so she's moving into Zimbabwe and her next country. So she's looking for that expansion capital. But she grew 2x for the last 4 years, I think, looking at her numbers. She's slowed down recently, and I think that's because she's recycling her money. And I think the current shareholders are pulling out some of that capital too, so we want them to plow back. But it's deals like that we really love. Overlooked, good unit economics, great leadership, just doing a tech-enabled business and getting money out the door to people that currently aren't able to do it. So, I mean, it's a great business. Those types of things. There's some that have extremely high valuations and I don't think they're justified, mostly in Kenya. I think the prices in Kenya are out of control. So you have companies that are having like 100,000 in revenue asking for a 7-8 million post-money cap on their stake. It's just.
There's another question on this, because I look at some deals out of Africa and valuations are so inflated over what you get in the real markets, even in the US. In the US, it's a lot more stable, there's a lot less risk. Do you think there'd be somewhere like how it sounds like you're seeing that pretty often, that's pretty standard?
We do, and it's 2 reasons: ignorance and stupid money. So you've got a lot of people now getting excited about Africa, but they're like, it's free. They're free money that they're coming in with, and they're jacking up valuations on companies because they'll go into Kenya. Our pipeline is still pretty narrow, but there's a few good deals. And when you have that amount of money chasing those few deals, you're going to see valuations that are higher than they are here. Some of our LPs are, fairly savvy investors out of California. They're like, this is crazy. And we have deal calls where our IC is having a founder pitch, and then our members are in like a fishbowl listening in. And I'll get phone calls after being like, that's crazy valuation. Like, I know. This is exactly what we're seeing here. And that's only in certain pockets. That's Nigeria 2 years ago, not right now, because the Naira just crashed. So now it's a buy for Nigeria. Kenya is hot. Kenya, I would only selectively come in when you're at that pre-seed round of like a 3 to 5 million. And I know that sounds crazy, but that is what that market is asking for. Some people are just coming and saying, well, we want 7 or 10. Like, you know what? It's just too high. But people are buying it because there's not enough deals and they like Kenya. So again, it's country selection. You have to know which country. That deal I was just describing in Zambia, nobody's there. So that's a buy. We love that. Because we'll come in, we'll find that deal where most people won't go in there. Any questions? Good? Time? Okay. Thank you all very much.
Well, thank you for coming. Take some time to meet and talk with Matt and Laura, and Tim is in the back. Tim, why don't you stand up? As they mentioned, he's involved with a lot of their activity, helping them out. And certainly grab Jackson and Tanner, I'd love to talk to you about this program. And we're going to take the activity we've been doing for years and really formalize it to get more donors involved in this impact investing space. Grab some desserts. If you only grab cheese and some of the shrimp, there's desserts in the back there as well. So make sure you grab something on your way out. And thanks for coming.
Yeah.